We will learn about business organizations in this video. As I discussed before, we can identify different types of business organizations. In this video, you will learn about sole proprietorships, partnerships, corporations, cooperatives, and state-owned enterprises. Firstly, sole proprietorship. A sole proprietorship is a business owned by an individual. There are no employees. There is only one person who is the owner. He is doing all the activities. He is purchasing raw materials, he is doing a production process, and he is selling his products to the market, and he is managing the business. He is doing all the business activities. Those types of businesses are sole proprietorships. Now let's discuss the characteristic of sole proprietorship. There is only one person. Therefore, capital is provided by a single person who is the owner. When it comes to profits and losses, they will be borne by the owner because there are no partners to share it. Then profit belongs to the owner and losses do the same. Unlimited liability of the owners. When it comes to settling debts, if the business doesn't have enough resources to repay, the owner must sacrifice his personal property. Just assume there is a bank loan and not enough money in the business to pay it off. Then the owner should use his private properties and money to pay it off. And also, there's no limit. He has to sacrifice more money to settle debts rather than what he invested in the business. Next on, not a separate legal entity. In the eyes of the law, it is not a legal entity. If there is a litigation process, it will be taken against the owner, not against the business. When it comes to the agreements and bank loans, the owner should obtain them under his name. The next characteristic is a lack of business continuity. With the death of the owner and mental impairment, the business activities will be stopped. Registration is not mandatory. If the business was established under the full name of the owner, registration is not required. When it comes to companies, business registration is mandatory. Now let's discuss the advantages and disadvantages of a sole proprietorship. It is convenient to commence because there are no strict legal regulations and not mandatory to register. With minimal capital, one person can start a business. All the profits belong to the owner, no need to share it among partners or no profit distribution. Privacy of the business information is secured, no second party is involved. The business secrets are safe with the owner. The owner can use his skills to the best and no interference in decision making. The owner can make his own decisions. Next, disadvantages: unlimited liability of the owner, difficulties in raising capital, a single person's money won't be enough for business expansion, no continuous existence, no legal personality, individual decisions can be unsuccessful. Partnerships. Now here you can see the definition of partnerships. The relationship among persons conducting a business in common with an objective to earn profit is known as a partnership. A special law affects partnership businesses, that is the Partnership Ordinance of 1890. Now let's discuss the characteristic of partnerships. When it comes to a partnership, there should be a minimum of 2 members and a maximum of 20 members. The number of members in a partnership is decided based on the Companies Act number 7 of 2007. In a partnership business, there is a special agreement among the partners, which is a partnership agreement. This type of agreement says how to distribute profits among the partners, the way of recruiting a new member, continuity of business, likewise many other agreements that affect different aspects of the business. This agreement can be in written, oral, or implied form. When the partnership agreement is written, it is called a partnership deed. According to the Prevention of Fraud Ordinance, if the initial capital of a partnership is more than 1,000 rupees, the partnership agreement should be written. Other characteristics are unlimited liability, the same as all proprietorships. Partners must sacrifice their private funds to settle liabilities. Registration is not mandatory, not a separate legal entity, and no continued existence. Now let's discuss the advantages and disadvantages of partnerships. Firstly, let's discuss the advantages. Just like sole proprietorships, partnerships are easy to start. If there are partners, if they have money, they can easily start a business. They can raise more capital because there is more than one person. They can take the partner's contribution and they can utilize everyone's skills for the business. Just assume there is one partner who is specialized in accounting. Then the business can use that partner's knowledge. Liabilities are shared among the partners, but still it is an unlimited liability. In a sole proprietorship, the owner should bear all liabilities alone. But here, the liabilities will be shared among the partners. And also, profit is shared among the partners. Next, they can make collective decisions. Then there is a lower possibility of unsuccessful decisions. Now the disadvantages. Unlimited liability and profit will be shared among the partners, disagreements among partners, lack of continuous existence, the business can dissolve at any time they want, and no legal personality. Now let's learn about the incorporated companies. The companies are registered under the Companies Act number 7 of 2007 with the legal personality. When it comes to companies, they issue shares to raise capital and their liabilities are limited. Now let's discuss the characteristic of companies. Companies are incorporated under the Companies Act with perpetual succession. It means companies are not easy to dissolve and they will exist for a long time. And it has limited liability. Companies can raise capital by issuing shares. What is a share? Share means a unit of ownership of a company. If you buy shares from a specific company, then you will be an owner of that company. Now let's discuss the advantages and disadvantages of companies. The advantages can raise more capital than other businesses, considered as a separate legal entity. Owners can use the company name for agreements. No need to use owners' personal names. Limited liability. Owners don't need to sacrifice their personal wealth to pay off debts. Perpetual existence. The death, insolvency, or departure of a shareholder doesn't affect the existence of a company. Sole proprietorships and partnerships are managed by the owners, but companies are managed by a board of directors. Now let's discuss the disadvantages. A greater level of legal provisions. There are a lot of laws that the company should adhere to and not easy to start up a company. And profits and ownership are shared. Profit will be shared among shareholders as dividends. Next one, cooperative societies. We can define a cooperative society like this. A cooperative society is a democratically controlled independent organization that shares collective ownership. To start a cooperative society, there should be a minimum of 10 members. Capital is raised by members' subscriptions. Initial capital is provided by the members. Cooperative societies are required to be registered under the Cooperative Societies Act number 5 of 1972. Now look at the examples. Sri Lanka Multipurpose Cooperative Societies, Sri Lanka Coconut Producers Cooperative Society, Thrift and Credit Cooperative Societies. Now, characteristic of cooperative societies. Democratic control, voluntary and open membership, collective ownership of members, and they have common objectives and needs. Now let's discuss the advantages and disadvantages. Advantages: democratic control, focusing on the members' well being, government incentives, and shared economic benefits. Profit is shared among the members. Disadvantages: limited capital. Cooperative societies rely on the members' subscriptions, so it is difficult to raise capital, and they should work according to the cooperative policies. State corporations. State corporations are fully or partially owned by the government and commence under a General or Specific Parliament Act. State corporations are controlled by a board of directors. We can use different names for state corporations such as commissions, authorities, boards, and bureaus. Now look at the examples of state corporations. Sri Lanka Rupavahini Corporation, Sri Lanka Port Authority, Coconut Development Authority, State Pharmaceuticals Corporation of Sri Lanka, Sri Lanka Bureau of Foreign Employment, and Export Insurance Board. Now let's discuss the characteristic of state corporations. State corporations are owned by the government. Their main objective is to provide services to the general public. They have legal personality established under general or specific act and perpetual existence. Now let's discuss the advantages and disadvantages. Essential services are provided by state corporations and reduce the monopoly effects of the private sector. The monopoly effect means a single seller dominates the market. Profit will be owned by the public because governments spend their income on social welfare activities. Disadvantages: limited independence in decision making and need to adhere to the financial regulations of the government. Next, departments fully owned by the government and controlled by a ministry. Departments are providing various services to the general public. For example, Sri Lanka Railway Department, Sri Lanka Postal Department. Characteristics of state departments: owned by the government, controlled by a government. For legal activities, the head of the department should represent the department using his designation. There is a continuous existence for the department, and departments are funded by the government. Now let's discuss the advantages. Departments are providing essential services to the general public. Departments are handling long-term development activities. For that, they need a large amount of funds, and also a lot of people work in the departments. Therefore, they are providing a lot of employment opportunities. Departments provide services to enhance the living standards of the general public. Disadvantages: making decisions takes time because it needs approval from the parliament and the relevant ministry. There are a lot of rules and regulations to adhere to, such as the government financial regulations, the establishment code, and different circulars.